everyone. My name is Robin Dolezal, and with me today is Dan Nentel and Alex Pars. We apologize, we are not going live today. You will be getting this after the fact. Facebook was not letting us go live today. If you've missed any of our other videos, you can find them on our Facebook page under the video tab or our website, ironwoodfinancial.com. So yesterday we had a great conversation where we were talking about oil. So let's just kind of recap what happened with oil today, Dano. Just as much down or?
Different. Actually, if you looked at yesterday's down market, that was actually way up today. So again, this is a hard concept because what we were talking about yesterday was the May 21st contracts for oil. So you had to settle up today and then you get them next month. And the tankers are on their way and you have to be ready to receive the oil. Well, speculators were buying this oil at prices they thought were beaten down, and they were super excited to gobble up a bunch of profits. And as we got closer to the day, with what's going on in the world, people realized, uh-oh, nobody's driving. Nobody's flying anywhere. The amount of demand for oil isn't there. And the speculators thought, oh, I can't receive this. I can't empty my pool and fill my pool up with crude oil and try to refine it myself. It just, mechanism doesn't work. So they had to sell them, and they were all sold at the same time, got to the point where oil was trading at negative $39 a barrel. Well, today, calmer heads came back to earth, and the economy, that May contract came back to the point where it was trading for, what was it, $9 a barrel or something like that, 5 to 9?
Yep.
So it was profitable. But the problem is people realized there's an issue going on, and that is the economy is shut down. We've been so optimistic for the past few weeks that, hey, we're going to flatten the curve. People are going to be healthy. I'm going to go to the club and I get to go outside and go out to dinner, that I'm going to put my money in the stock market. And today they said, hold it. Nobody's driving. Nobody's going to want to go to a big convention. Nobody wants to get on an airplane. And now what happened is the June contracts got beaten up. So today the May settled for positive, but now the June contracts went way down because people thought, well, this could happen again. Are we going to be back up and running by June, which we'd have to pay for them sometime in May? Mm-hmm. So the world kind of realized that maybe we are in a global shutdown and got a little nervous. So the big issue, though, is I was talking to my wife about this, and we were trying to explain this to my 13-year-old. And he was like, why did oil go down? And we're trying to explain, well, people aren't flying. They're not driving. And my wife said, well, I haven't put gas in my car. She goes, I do it every 5 weeks. We have a big Suburban to drive the kids around. She goes, I haven't filled it up but one time in 5 weeks. And my son Henry said, oh my goodness, so people aren't buying oil. And I said, exactly, that's driving the price down because the demand is gone. Which then made us think, and I actually talked to my wife about that, which is our cars getting up there, long in the tooth as far as miles. I keep reading that car prices might come down. And so Alex, kind of the topic for today is, when should be a good time for me to trade out my family wagon?
Well, it depends on what you're looking to buy.
Gotcha. Another wagon. We want another wagon. Just before you jump into that, Dan, when you said, having to describe something to your 13-year-old, my 6-year-old Grayson, this was probably last week, I was probably talking on the phone to Alex or someone, and he asked me to describe, what is short selling the stock market, Dad? Like, well, I'm not sure you're going to grasp this concept, but anyway.
No, that's a hard one.
So obviously oil's down and no one's driving their cars. So what does that mean for the auto industry, Alex?
Before I jump into there, I just wanted to mention something that was kind of interesting today, which was oil went up from negative 38 to 10 or 9 or whatever. Right. And the ETFs, or the ETN, that tracks oil lost 25% for the day. So that was kind of interesting that you get these total different direction on a day when it's something that's supposed to track it, doesn't. And that's that disconnect we talked about with oil futures and derivatives as opposed to actually owning the asset.
Yeah.
Same thing yesterday. That very same index, oil's down 299%, and that same index was down 10%. So maybe it's catching up. Disconnect is real.
The disconnect's coming back. So there's different parts of the auto market, and what we've seen so far is a huge, obviously, slowdown in sales. So you saw in March, which was before the worst of the shutdowns, we saw sales down, I think, 36% year over year. So that's
Yeah.
a huge slowdown. That goes from an annualized rate of about 17 million autos to about 11. And that's numbers that are approaching the 2009 numbers, even though, keep in mind, it's a bigger economy, there's more people, et cetera, than 11 years ago. So that could be almost equally as bad as that number, even though it's technically a higher number. And just for fun, we've got a slide of that, which gives you a good, right here we've got this drop down here in '09, and then things are going fine, 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 and then boom, right off a cliff. Okay, and again, that's March. That's not April.
Yeah.
Okay, so in April, what was the number you saw, Robin? You said
April is so far down. April 55%.
is that? Do you know if that's for March or is that just overall?
I think that's just in April because March was 39%. Sales for the first part of April 55%.
Okay, and obviously we've seen the commercials where the dealers are pulling out all the stops. They're trying to entice you with better financing. So we've seen 0% for 84 months, no payments for 3 months. They'll bring the car to you. If you don't like it, you can give it back in 7 days, so on and so forth. So they're doing whatever they can to try and drive sales as people stay home. But let's be honest, people are staying home. They don't really need a car in many cases.
So
Now, before you go on, I will say that many of these folks are having great deals. Or I don't know what the great deal is, but they are saying deals for people in the healthcare and on the front lines who might actually still be driving, obviously. So that might actually be a good deal for them because they're obviously needing their car. But anyway, go on.
2 questions.
But my understanding is we're not seeing a lot of discounts or unusual discounts in the new car market at this time. We're still seeing the discounts from, maybe August or July kind of thing. So this is not yet that big deal. And it's very similar to real estate. The speed, it's so fast what's happened here that it really doesn't matter that they've gone without sales for a month. They're not yet willing to discount a car by 20 grand.
Yeah.
So that was actually a question. So the deals right now are just getting attractive financing. It's not like we're getting some smoking deal on the actual rig.
Right. It doesn't look like it.
And now what about if I wanted to trade? I remember you telling an anecdotal story about you can't turn a lease in because the dealerships don't want it. What about, in my case, I'm going to trade in my 6-year-old Suburban and get something else. Will they take my old car?
They'll take it, but only if you buy a new one, obviously. And that's what they were also saying with the leases, is we won't take your lease return back unless you buy a new one because we just don't have space on the lots. And so now, if we're talking about the used market, there's actually 2 parts to the used market that I think will be interesting. Let's start with the high-end part of the used market, which would be the late model vehicles, the ones that are 1-2 years old. And what's happening there is we've seen that the big auctions are actually mostly shut down. There's some online selling, but not in-person selling. They're set to reopen next week. And so far, what we've seen is that the prices for, the late model vehicles, they've dropped about 10 or 11% as compared to last year. And that's just so far. The really concerning part is when you look at the financials of some of these companies that own a lot of used cars or late model vehicles like Avis or Hertz or Enterprise. Well, what are they doing right now? All their cars are sitting around going nowhere. And they're short on cash. They need cash. They're talking about in a week or 2, they might start flooding the used car market with rental cars just to raise cash, just prop up their share price in their operations. So that is something that could dramatically reduce the price of, your 2019, 2018 vehicles and make those a good deal to come in the next couple of weeks or months.
Yeah, that's a really good point. And man, what a double whammy for those guys, huh?
Yeah, that's going to be tough, especially if they really do flood it. Because if you flood the market with something, you don't get fair value, and that's not good for the rental companies.
Right.
So,
all right. So let's talk about the next part of the used cars because we've got all the stimulus money coming out. in theory, there's a lot of people walking around with some cash who might need a used car that's obviously not the 2018, 2019s.
Yeah, I think there's going to be a lot of movement in the low end car market, which is, as we talked about, a family of four, they just got about $10,000 in government stimulus, assuming they got 2 unemployment checks and the stimulus checks and so on and so forth. In places like Arizona, and for about 50% of the nation, they just got a big raise. And so last week we saw people buying phones, we saw people buying TVs, and now the question is, are they going to turn in that really, really low end car and buy a slightly nicer used car? So I think we're going to see a lot of that going on, where they trade up into the $5,000 to $10,000 car, something you don't need to get a loan for, but you've obviously had an aspiration or need for quite some time.
Yeah.
So a question for you then, Alex, is there such a market where we could, again, it seems like such a terrible thing to say, like, okay, can we take advantage by those poor used, rental car companies? Is there a publicly traded company that does that lower end? I know we saw CarMax is down about 60%, but they're not exactly a low end.
Yeah, the difficulty is the financing. Where companies really make money is on financing something. That's true of your frontline auto dealers all the way down to your used. If you remember the Drive Times or the Ugly Ducklings of the world, where they charge 25, 30% interest on a car and they'll sell it 3 times after they repo it.
Yeah.
The payments on a used car can be as high as a new car if you don't have good credit. And what's a concern going forward is who's going to lend to somebody who's unemployed. We saw 22 million people unemployed. Traditionally, there's no way you'd lend to them, right? But now they're actually making a really good income. So we may see lenders start being willing to lend to them just to move inventory. But until that happens, there's going to be difficulty with companies like CarMax, where I don't think they're selling $5,000 to $10,000 cars. They're probably selling $25,000 or $15,000 to $25,000 cars. And those are not something people can buy in cash.
Now, the biggest auto lender is what, Ally Bank?
Yeah, they're not having a very good time of it. They're expecting. What's that?
Continue. Yep.
Yeah. Just like with the housing market, Ally Bank, they've got a lot of used cars on their books. That's their collateral. What happens when the price of those used cars goes down?
Gotcha.
And you get a lot of unemployment, and you get a lot of uncertainty. This could look very, very bad for someone like Ally. Could get a lot of maybe even strategic foreclosures on cars.
Mm-hmm. Yeah.
Now, GM and Ford, those their financing arms are whole subsidiaries of?
Yeah, they do a lot of their own financing, and that's how they're able to offer 0% for 84 months. But that's all part of the deal. Like, you've got your local furniture stores where if you pay cash, they give you a 10% discount, or you can get 2 years no interest or 1 year no interest. Well, it works out to still being credit card rates if you finance it.
Very good point.
So if they're charging full price for a $80,000 car and financing it for 84 months at 0%, they're still doing fine.
It seems to me that the financing isn't going to shoot back up in a month or so. So there might even be better deals to have in, say, summertime, late summer, when we still have 0% financing for God knows how long. And then we'll probably start to see some of those stickers come off a little bit, where you're starting to see those $10,000 off, or whatever it is, relatively speaking. But obviously right now we're not seeing that, but I bet it seems to me that in a few months we will.
Yeah, you got to remember, this has only been going on in terms of a shutdown for a few weeks, right?
Right.
I mean, a car dealer, presumably, I don't know of poor guys who own car dealers, right? So presumably they've got the cash to weather this. They're not willing to start taking losses on inventory just yet.
Yeah.
Maybe they'll be willing to start
which is a
taking
good point,
losses.
because don't they make most of their money on the service side of things? So though we aren't seeing a lot of sales, the Jim Clicks of the world are still open to service cars, and they're still open now. Obviously they're not as busy, but
yeah,
they are.
Again, it comes down to miles driven. Dan, you filling up once every 5 weeks? What were you doing before?
with sports every 4 or 5 days.
Yeah. Well, that means you're not putting the miles on. If you're not putting the miles on, you don't need oil changes. You don't need oil filters. You don't need, belts, tires, you name it. All that stuff is obviously way off right now. So even if that's your profit source, it's
True.
not going to be as lucrative as it was 3 months ago.
No.
It'll come back, maybe as soon as next week. Who knows, depending on what the states do. But we expect to see more movement going on in terms of vehicles. Obviously, I don't think we're going to get to lower than we are now.
Right.
Right.
Yeah.
So,
Okay. Well, thanks, boys. I appreciate it. It sounds like I don't know. That was like Alexa or something. We might have another stimulus plan, so that either we might talk about that tomorrow or later in the week. Other than that, I appreciate your time today. If you have any questions, please don't hesitate to reach out to us via email or phone call, and we'll get back to you. Or we may answer that question tomorrow if we think a lot of people want to hear it as well. And here's our disclosure. Anyway, boys, thanks so much. Have a great afternoon. I'll talk to you tomorrow.
all right, take care.
Hopefully the bandwidth is stronger tomorrow.
Yep.